They told you money was paper. They lied. Money is belief. Money is energy. Money is control over time itself. And the ones who truly understand this ... are no longer buying when it feels safe. They are buying when the fear is thick enough to choke the herd. They are buying Bitcoin every time it dips because they understand something the average mind refuses to confront. The system you grew up believing in is crumbling, and the cracks are no longer hiding. While the news floods your screen with distractions, politics, celebrity trials, economic optimism dressed in PR spin, the monetary base is quietly being diluted like sugar in the ocean. M2 money supply in the United States expanded by over 40% between 2020 and 2023. That's not capitalism. That's financial morphine. Liquidity pumped through the veins of a dying fiat system. But no amount of injection can cure a terminal disease. It only delays the inevitable, the collapse of trust in paper, in the dollar, and the old gods of value. And the new rich? They see this not as catastrophe, but as opportunity. They are not like the old rich, the ones who made fortunes off of extraction, manipulation, and slow-moving institutions. The new rich are leaner, faster, borderless. They understand signal through the noise. When Bitcoin drops 15% in a week, the herd panics. They see red candles, volatility, chaos. But the new rich, they see a discount on the future. Because they've already made the mindset shift that separates the next wave of generational wealth from those still chained to Wall Street thinking. Let's be brutally honest. The dollar is not backed by gold. It's backed by confidence. Confidence in a government that prints trillions. Confidence in a central bank that manipulates rates with academic arrogance. Confidence in a system that bailed out banks, not people. And that confidence? It's eroding. Fast. Just like the Roman denarius debased into meaninglessness over a century. Just like the Reichsmark. Just like the Venezuelan bolivar. The average citizen believes hyperinflation can't happen here. But history doesn't care about belief. It cares about incentives. And the incentive today, for governments drowning in debt, is to inflate quietly ... systematically. Without your permission. This is why Bitcoin matters. Not because it's trendy, not because it made a few teenagers rich, but because it is the first provably scarce digital asset in human history, 21 million, not a coin more unalterable, unforgivable, unstoppable. It is, as Satoshi designed it, a weapon of mathematical rebellion. The new rich understand this. That's why every dip, every crash, every manipulation, whether it's driven by whale, liquidations or regulatory FUD, is a buy signal to them. They are not emotional. They are not reactive. They are systemic thinkers, trained in Drucker's discipline, Schumpeter's creative destruction, and Kahneman's cold psychology. They study cycles. They know how capital moves, from boom to bust, from risk-on to risk-off, from fiat illusions to hard assets. And they see Bitcoin not just as a hedge against inflation, but as a call option on the future of money itself. Pause for a second. Look at the timeline. Every single halving cycle, every 4 years, Bitcoin has behaved like clockwork. 2012, sub $100 to over $1,000. 2016, $600 to $20,000. 2020, $9,000 to $69,000. 2024, ticking. The pattern is not guaranteed, but it is telling. The halvings reduce new supply. Meanwhile, demand grows as institutions, sovereign wealth funds, and retail awaken. What happens when BlackRock starts moving 1% of global assets under management into digital assets? What happens when nation-states begin to store energy in code instead of in treasuries eroded by inflation? The new rich are not speculating. They are front-running inevitability. They know what few dare admit. We are entering a post-sovereign era of value. Money is being dematerialized. Borders are becoming less relevant to capital. Code is replacing policy. And while the old guard argues over rate hikes and labor reports, the tectonic plates of the economy are shifting beneath their feet. Bitcoin is not the only asset in play, but it is the canary in the monetary coal mine. It's the early signal, the pulse of distrust, the escape hatch from centrally planned decay. Let's talk about market manipulation, because yes, it exists. Liquidity drives asset prices far more than fundamentals in this age. Just look at the S&P 500 since 2008. We've created asset price inflation disguised as economic recovery. When the Fed prints, risk assets pump. When it tightens, markets bleed. It's not capitalism. It's a dance choreographed by central banks, and the smart money knows how to read the rhythm. So when Bitcoin dips, they don't panic. They know the liquidity cycle is turning. M2 starts expanding again. Bitcoin rips. Real yields go negative. Bitcoin becomes magnetic. This is the difference. The new rich buy the pain because they understand where the money is flowing, not where the headlines point. Let's go deeper. There is a psychology to markets that most investors never master. We are not rational creatures. We are narrative-driven. We buy stories, not assets. In a bull market, everything is a genius move. In a bear market, even solid bets feel suicidal. That's why the new rich detach their emotions from the chart. They operate from principle, not panic. They ask, is the thesis broken? If not, they accumulate. Because volatility is not a bug. It's the tax for asymmetry, for outsized returns. For wealth that outpaces inflation, taxation, and stagnation. Now listen closely. There are two kinds of assets in a world like this. Ones that dilute, ones that defend. Fiat dilutes. Bonds dilute. Cash dilutes. Real estate defends if you can protect it. Gold defends, but it's clunky. And Bitcoin? Bitcoin doesn't ask for permission. It's portable, unconfiscatable, borderless, faster than gold, harder than fiat. More neutral than real estate. This is why the new rich accumulate. Because in a game rigged against the individual, Bitcoin is one of the few assets that levels the field. Now, the final piece. Why do the new rich specifically buy every dip? Because they've studied behavioral finance. They know that most people will sell at the bottom. They know that fear is the ultimate signal. They know that markets move not when everyone believes, but when belief is scarce. It's the Kahneman paradox. The loss feels twice as painful as the gain feels good, so the average mind sells at the first sign of red. But the disciplined? The strategic? The informed? They buy blood. They buy dips. They buy when the herd is silent. Because that is where the wealth transfer happens. Not during the rally, but during the collapse. And the new rich. They are building positions while everyone else is building excuses. The average investor waits for confirmation. The new rich create conviction. They do not wait for CNBC to bless their decisions. They do not care for mainstream analysts issuing price targets months after the move. They know, as Schumpeter said, that economic progress is never linear, never gentle, never democratic. It's creative destruction. And in that destruction, there is a window, not for the timid, but for those with clarity. The world is moving into a bifurcated economy. On one side, assets that are tied to governments, to debasement, to artificial yield. On the other, assets tied to scarcity, decentralization, sovereignty. The new rich have chosen their side. They're not gambling. They're allocating with the precision of military logistics. They understand Bitcoin isn't a lottery ticket. It's a weaponized reserve asset. You don't hold it to get rich. You hold it to stay free. Ask yourself this. Why are billion-dollar hedge funds, the ones who mocked Bitcoin a decade ago, now filing for ETFs? Why is BlackRock, the ultimate insider, pushing for direct exposure? It's not because they believe in Satoshi's philosophy. It's because they see the writing on the wall. They see the shift. 60/40 portfolios are dead. Treasuries don't yield enough to beat inflation. Real estate is increasingly illiquid and politically vulnerable. Equities are overbought and algorithmically rigged. So, where do you go? You go where the supply is fixed. You go where the state can't print more. Where time itself is embedded in the code, block by block, halving by halving, with a precision no central planner could ever replicate. Understand this. Bitcoin is not just digital gold. It is time, crystallized. It is energy, encoded. It is trust, decentralized. It is a global vote of no confidence in monetary policy as we've known it. And every time it dips, every time it draws blood, every time the mainstream screams bubble, that's when the new rich step forward. Not with emotion, but with mathematical clarity, because they've mapped this game. They've read Taleb. They've studied Piketty's data on capital concentration. They've seen how those closest to the money printer get rich first, and everyone else is left chasing crumbs. Bitcoin flips that script. It democratizes early access. And that's what terrifies the legacy class. Let's look at what's actually happening on the ground. When Bitcoin drops, retail sells. Panic spreads. But if you look at the on-chain data wallets holding 10 plus BTC, they increase. The whales, the sovereign funds, the tech-forward hedge funds, they accumulate. Glassnode confirms it. Exchange balances drop. Cold storage wallets rise. It's not a dump, it's a transfer. From the impatient to the prepared. From the weak hands to the architects of the next economy. And that's what this is. This isn't just a market shift. This is an economic architecture. Fiat currencies were built on national sovereignty. But Bitcoin is built on mathematical sovereignty. Fiat requires trust in politicians, in inflation targets, in promises made at Davos. Bitcoin requires trust in code, open source, audited, immutable. That's why the new rich are betting on it, because they don't trust the next central banker. They trust the next line of code. You can feel the pressure building. Governments banning self-custody wallets. IMF warning small nations against adopting Bitcoin. CBDCs rolling out to track and control spending. The war isn't just for your money. It's for your economic autonomy. And that's why Bitcoin dips are more than discounts. They're tests. Tests of your vision, your discipline, your courage to position ahead of the curve. Because this isn't just a financial play. It's a philosophical decision. Let me be clear. You do not need to worship crypto. You do not need to abandon fiat entirely. But if you fail to understand what's unfolding, you will become economically irrelevant. The elites are playing multi-decade games. They think in cycles, in decay curves, in rate of change. You can keep thinking in quarters, or you can start thinking in eras. And in this new era, scarcity is king, permissionless innovation is the throne, and Bitcoin is the cornerstone. The new rich are not afraid of volatility. They expect it. Volatility is the toll gate to extraordinary gains. It's the filtering mechanism. It separates those who chase signals from those who create them. They know how to read RSI, moving averages, macro sentiment. But more importantly, they read incentive structures. They read human behavior under pressure. They know that when everyone is screaming, this time it's different, it usually isn't. It's the same cycle. Fear, capitulation, accumulation, explosion, euphoria, repeat. So when the dip comes, they don't react. They execute because they're not playing the game most people are even aware of. Let's zoom out. The petrodollar is weakening. The BRICS nations are building alternative payment rails. Gold is hitting record highs, quietly. US debt is above $34 trillion and climbing. The interest alone is unsustainable. How long can the illusion hold? The new rich aren't waiting to find out. They are rotating, positioning, preparing for monetary regime change, not overnight, not in panic, but with surgical foresight. Bitcoin isn't a bet. It's an insurance policy on the collapse of credibility. But here's the punchline, the most powerful part, is that they don't need it to go up tomorrow. They're not gamblers. They're not dopamine junkies chasing pumps. They are builders, strategists, narrative architects who understand that true wealth is not about short-term price action. It's about where value is going next. And right now, value is flowing toward scarcity, toward censorship resistance, toward decentralization, toward code over committee. Bitcoin represents all of that. And every time it drops, it becomes even more attractive. Because the more the system tries to shake it, the more it proves it can't be broken. You want to know why Bitcoin survives every assault? Because it doesn't negotiate, it doesn't lobby, it doesn't yield to fear, regulation, or manipulation. It simply keeps producing blocks. Every 10 minutes, unbothered by market panic, unaffected by political noise, unafraid of central bank whispers or media distortion. There is no CEO to fire, no board to bribe, no country to sanction. That's why the new rich don't flinch when it dips. Because they're not betting on people, they're betting on protocol. But this isn't about technology anymore. This is about architecture. When Rome fell, it wasn't the swords that failed. It was the systems, the incentives, the overextended promises built on illusions of permanence. Sound familiar? Nations today are drowning in debt. Currencies are being devalued in real time. Trust in institutions is evaporating. Pensions are underfunded. Youth unemployment is skyrocketing. Inflation statistics are engineered, diluted, manipulated. And yet, the illusion persists until it doesn't. The new rich understand that we are not in a cycle. We are in a transition from industrial to digital, from analog to algorithmic, from permissioned wealth to programmable sovereignty. Bitcoin isn't an asset class, it's an exit ramp. So when you see the chart bleed red, that's not a warning, that's an invitation. Because behind every panic, every dump, every short-term correction is a transfer of power, from those who fear the volatility to those who understand the volatility is the price of admission. There is no freedom without fluctuation. There is no independence without risk. The fiat world taught you to be allergic to drawdowns, but the new rich are immune, because they know that when the world resets, you don't want to be holding liabilities, you want to be holding proof of work. And proof of work, that's more than a consensus mechanism. It's a philosophy. It says, you cannot fake effort. You cannot cheat energy. You cannot manipulate time. Every Bitcoin mined is the byproduct of real energy, real computation, real cost, which makes it the antithesis of fiat. Fiat is printed. Bitcoin is earned. Fiat is trust me. Bitcoin is verify. That's why every dip is a reminder, not a threat. A reminder that the crowd still doesn't get it. A reminder that the asymmetric opportunity still exists. And the new rich? They don't beg for opportunity. They build for it. Let's talk about capital flows. Where is smart money going when equities start whipsawing? Where does capital run when emerging markets collapse under rate hikes? Where do sovereigns look when sanctions weaponize the dollar? They look for neutral ground. An asset uncorrelated to political will. An asset outside the system, yet globally liquid. Gold served that role for centuries, but gold doesn't teleport. Gold doesn't verify in milliseconds. Gold doesn't program value across borders. Bitcoin does. And the new rich see this, not as a replacement, but as the evolution. Gold 2.0 ... money without masters. Still think this is a phase? Let's talk generational change. Millennials and Gen Z don't trust Wall Street. They don't believe in pensions. They've seen 2 financial crises before age 40. They've watched central banks inflate assets they don't own. So they build their own playbooks. And at the center of it, digital assets. Decentralized systems. Ownership that's immune to confiscation. Bitcoin isn't just a hedge to them. It's a declaration. A way of saying, I will not wait for this system to rescue me. I will build outside it. I will bet on code, not committees. That is the mindset of the new rich. And every dip. It's a deeper stamp of conviction. Now let's get tactical. You want clarity? Let's talk positioning. Here's what the most sophisticated investors are doing. They're not chasing green candles. They're averaging in when blood hits the streets. They're not trying to tops or bottoms. They're anchoring to cycles. They know having cycles compress supply. They know ETF demand creates new walls of institutional liquidity. They know global liquidity cycles are the true driver behind the big moves. So they front-run it, quietly, relentlessly, patiently. They read the M2 money supply. They track real rates versus inflation. They don't listen to headlines. They watch what central banks do when the liquidity tide recedes. Because when liquidity tightens, Bitcoin dips. When liquidity returns, Bitcoin explodes. And if you're only reacting when it explodes, you're already too late. So here's the truth. If you don't have a framework, you will be a victim of the cycle. You will be swayed by fear, by narratives, by noise. The new rich don't play that game. They build systems of clarity. They know their thesis. They know their conviction. They know what they will do before the market moves. That's the only edge that matters in a world this chaotic. Because chaos? It's not the enemy, it's the environment. And in chaos, those with discipline dominate. Let me say something that might make you uncomfortable. If you are still judging Bitcoin by its price, you're already behind. The new rich are judging it by how early we still are, by how misunderstood it still is, by how deeply centralized institutions still resist it. Every protest against it confirms its power. Every ban confirms its threat. Every media smear confirms the fear it generates in the status quo. They don't need mass adoption to win. They only need the laws of math and time to keep working. And so far, they've never failed. So here we are, another cycle, another dip, another flush of weak hands. And the new rich? They're not surprised. They're not shaken. They're not reactive. They're grateful. Because they know this is what asymmetric opportunity feels like. It feels lonely. It feels uncertain. It feels like swimming upstream. But that's how wealth is made in a transition era. Not by following, by positioning. They don't fear volatility. They own it. They don't fear decentralization. They accelerate it. They don't wait for someone to tell them the bottom is in. They define their own floor, and they build from it. You want to understand the game? Then look past the charts. Look past the noise. Look past the price. Look at the migration of power, because that's what's really happening. We are witnessing a historic reallocation of economic control, away from institutions that manufacture money, toward individuals who understand money cannot be manufactured indefinitely. This isn't a bull run. This is a monetary revolution hiding in plain sight. And the dips? They are not setbacks. They are stress tests. For your clarity, for your patience, for your ability to think decades ahead in a world addicted to dopamine. The average investor still believes the government will save them. The new rich have already stopped asking. They've read Drucker. They understand that every institution exists to solve yesterday's problem. And when tomorrow arrives with exponential force, those institutions collapse under their own weight. The Fed can't pivot fast enough. The IMF can't print credibility. Congress can't legislate efficiency into a decaying machine. The system isn't just failing, it's fragmenting. And from that fragmentation, new architecture emerges. Architecture that doesn't ask for permission, that doesn't beg for bailout, that doesn't yield to central command. Bitcoin is that architecture. And that's why the new rich don't flinch when the price pulls back. Because they know, this is not about price. This is about protocols replacing politics. Zoom out even further. What happens when the world is more connected than ever? But trust in institutions is at an all-time low. We enter a post-trust economy. In a post-trust world, we don't rely on bank solvency, we self-custody. We don't rely on fiat stability, we store and fix supply assets. We don't wait for approval, we transact peer-to-peer, borderless, unstoppable. Bitcoin isn't a response to inflation. It's a response to institutional betrayal. That's the deeper reason the new rich are in. They're not just betting on appreciation, they're positioning against systemic fragility. Because once trust dies, money dies next. And once money dies, everything becomes chaos. Until something stronger emerges. That's why this asset isn't going away, because it's not a trade, it's an antidote. And yet most still don't see it. They ask, but what backs Bitcoin? The new rich don't laugh. They just answer. The same thing that backs fiat, belief. But belief, this time, isn't enforced by militaries and debt ceilings. It's encoded in math. Backed by compute. Proven by time. Secured by physics. What backs Bitcoin is the cost to rewrite it. That's what makes it different, not who issues it, but who can't stop it. No inflation lever. No interest rate dial. No fiscal gimmicks. Just a fixed supply, a predictable schedule. A clock ticking one block at a time. That's why it dips. Because it's honest. It doesn't promise endless upward motion. It punishes leverage. It destroys speculation. It refines your conviction or ejects you entirely. This is what every foundational technology looks like at the beginning. Misunderstood. Mocked. Then mimicked. Then ... quietly adopted by the very powers that tried to kill it. The same institutions that laughed now scramble to regulate. To co-opt. To hold without holding. To benefit without empowering. But it's too late. Because the protocol doesn't care. And the new rich don't wait for permission to act. They build sovereign stacks. They stack sats. They build businesses that are crypto-native, borderless, resistant. Understand this. The dips are not crashes. They are clarifiers. They separate noise from knowledge. They clear out the get-rich-quick tourists. They prepare the ground for the builders who will shape the next economy. Bitcoin doesn't reward those who chase it. It rewards those who study it, who live by the principles that created it. Discipline, patience, transparency, incorruptibility. That's why the new rich are winning. Because they don't just hold it, they understand it. And understanding is what creates durable conviction in an age of fleeting trends. Let's talk legacy. The families who built empires in the last century. They did it on land, on oil, on steel, on insider access to policy and capital. That game is dying. The new empires will be built on information asymmetry, sovereign finance, permissionless leverage, decentralized infrastructure, assets you can custody, verify, and transfer without begging anyone. Bitcoin is the foundation of that empire. It's the bedrock asset in a portfolio that isn't playing to survive the old world, but to own the new one. So when it dips, they don't panic. They allocate strategically, relentlessly, ruthlessly, because they know every dollar not positioned for the future is a dollar decaying in the past. Here's the hard truth. If you're waiting for the world to stabilize before acting, you'll spend the next decade watching others leapfrog you. Because the world is not stabilizing, it's accelerating. Every trend is exponential. AI, automation, tokenization. These aren't isolated headlines, they're converging. And the ones who thrive in that convergence, they're not the ones chasing comfort. They're the ones who embrace volatility as proof of transformation. That's the new rich. They are not speculators. They are narrative capitalists. They invest not just in what's rising, but in what's inevitable. So here's the final truth. Bitcoin isn't a trade. It's a test. A test of your understanding of money. A test of your willingness to exit the illusion. A test of whether you can hold something. Not because others believe in it, but because you do. And in a world drowning in opinion, belief backed by principle is the most valuable asset of all. That's why every dip is sacred to the new rich. It's not a price event. It's a spiritual event in economic warfare. Because when fiat systems falter, when trust erodes, when the tide pulls back to reveal what's real, there's only one question left. Will you still be standing, or will you still be waiting? This is the moment in history when most people look away, and the new rich lean in, while headlines scream collapse. They read Signal, while politicians play monetary theater. They track energy flows, wallet activity, supply issuance, while retail begs for rate cuts. They stack when liquidity drains, not after it floods. Why? Because they don't think in weeks. They think in epochs. And in this epoch, monetary gravity has changed forever. Bitcoin is not a bet. It's the new base layer for capital, for commerce, for civilization that no longer trusts kings, banks, or borders. It is the hardest money ever created, not by a government, but by a network immune to corruption. And in a world softening by design, hardness is power. Do you think it's a coincidence that every major fiat currency, the yen, the euro, the dollar, is being devalued simultaneously? This isn't mismanagement. This is the endgame. The entire fiat system is a castle built on credit, credit built on promises, promises built on political survival. And when those promises can no longer be kept, the machine turns to inflation always. It's not a bug, it's a survival tactic. Devalue quietly. Pretend it's temporary. Blame supply chains. Blame pandemics. Blame anything except the truth that the system only survives by stealing time from savers. But Bitcoin doesn't allow theft. It doesn't care about excuses. It enforces discipline without asking for it. That's why the new rich are migrating. Not physically, economically. They are exiting systems where money dies slowly and entering a system where value is conserved absolutely. Now let's turn to the psychology of the melt-up, because it's coming. The final act of a dying monetary order isn't collapse. It's euphoria. Assets will scream higher. Liquidity will pour in. The headlines will flip bullish. And the crowd, once afraid to buy at $20,000, will FOMO at $120,000. Because they don't understand that markets aren't rational. They're reflexive. Up creates more up. Belief creates more belief. And the media will validate every tick higher right before the next rug pull. But the new rich won't chase that high. They're already in. They bought the fear. They own the silence. They endured the ridicule, and now they ride not with emotion but with strategy. Because this was never about timing bottoms. This was about understanding narratives before they become consensus. Let's expose one more illusion. You've been told volatility is risk, that price drops mean danger. But the real danger isn't volatility, it's stagnation. Your fiat salary? Losing value daily. Your savings? Eroding invisibly. Your pension? Priced in promises that will never be delivered. And yet you feel safe? Because the line moves slowly? Because the numbers haven't turned red yet? Volatility isn't the enemy, it's the signal that something real is happening. Bitcoin dips because it's alive. Because it isn't controlled. Because it is the only monetary network that cannot be silenced. And that's why the new rich keep buying. Not in spite of the dips, because of them. Every drawdown is an opportunity to reallocate from fake to real, from debt to energy, from illusion to ownership. Here is the final truth no advisor, no fund manager, no talking head will tell you. We are not early in price. We are early in understanding. And when understanding catches up with code, you won't need a bull market to tell you what's happening. You'll feel it. When entire countries adopt Bitcoin not as a hedge, but as an escape hatch when central banks pivot and liquidity surges, but smart capital still exits to cold wallets. When Wall Street finally calls Bitcoin a strategic reserve asset, decades after cypherpunks whispered it in code, you'll know, you'll remember. You'll say, I acted before they understood. Because wealth, true wealth, is not built when it's obvious. It's built when it's inevitable, but unconfirmed. And this moment right now? It's that ... So what do you do with this? You stop waiting. You start learning. You stop fearing price action. You start understanding monetary physics. You stop outsourcing conviction. You start building your own thesis. You don't ask, is now the bottom? You ask, will I regret not owning the base layer of the next economy? You don't try to time Bitcoin, you align with it. Because in the end, every dip is a mirror. It reflects your discipline, your time preference, your real beliefs, not the ones you post, the ones you live. So here's your call to action. You are not powerless. You are not late. You are not trapped in this system unless you choose to be. The tools exist. The rails are open. The knowledge is free. But conviction, that's earned. And once earned, it compounds faster than any yield. You don't need permission to begin. You don't need applause to be early. You just need to step forward. When others step back, that's the spirit of the new rich. That's why they buy Bitcoin every time it dips. Not because they're fearless, because they're free. And in a world where most still live in financial chains wrapped in comfort, ... freedom is the only true wealth left. Now it's your move. Will you wait for the crowd, or will you act like the future is already yours? Will you watch the next monetary revolution happen on screen, or will you write your name into it block by block? The next dip is coming. The signal will flash again, and when it does, will you see fear or opportunity? The new rich already know their answer. Do you?